a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Fed tensions. An appeals court blocks President Trump from firing Governor Cook. The Senate confirms Stephen Miran to the board. Rethinking earnings reports, the SEC says it's prioritizing President Trump's push to reduce the frequency of corporates' quarterly reports. And a 25th record high of this year alone. Equity futures now extending gains as investors await retail sales data ahead of the Fed's decision. And for the proof, just look at futures. We have S&P futures and Nasdaq 100 futures pointing to gains after nice gains yesterday on AI enthusiasm and, of course, Fed rate cut enthusiasm as well. Though it should be noted that the VIX is above 15 today. We have gold also at a record. Of course, if interest rates are coming down, gold is potentially a nice metal to own, if you like, and we also have central bank buying, but we're very close to 3,700 now and at a record as well. Let's take a look at yields because we are, of course, going into the first of 2 days of that Fed meeting. That 10-year yield started yesterday at 407. We're down to just under 403 right now. Elsewhere, we're down about a basis point or so across the curve. The 2-cent spread now is below 50 basis points. We'll be watching out for anything that comes out in the next 2 days. But let's get to some individual movers now. Over to London and Valerie Titel.
Good morning, Vonnie. Let's start with Oracle because it's rising yet again in the pre-market, up 3.5%. This comes after a CBS News report saying that Oracle could play a key part in U.S.-controlled ownership of TikTok. This comes a day after the Treasury Secretary Scott Bessent claimed they had come to a framework agreement on TikTok. We wait to hear details. We have to wait till Friday until President Xi and Trump speak on the phone to agree on the framework. But it seems like Oracle is seen as one of the key beneficiaries of the deal. Let's move over to Dave & Buster's. This one's an earnings story here, Vonnie. Their adjusted EPS was less than half of that of expectations, a double earnings miss for Dave & Buster's, sending the stock down near 17% in pre-market trade. They had some issues with weaker margins on the back of some lower foot traffic in their flagship stores. Lastly, let's end on comics, a big business in comics. Disney is investing 2% in Webtoon, which is a digital platform for housing comics, also has it easy to read on smartphone devices. Now, this could potentially be a deal that could see Disney house all of its comics on the Webtoon platform, which would amount to 35,000 comics. Webtoon is up some near 50% in pre-market trade after this investment. Bonnie?
I'll have to have a look a little later on. Valerie, thank you so much. And later in the show, Kallum Pickering of Peel Hunt joins to discuss the economic and political trade-offs for the Fed. But first, let's turn to our top story. An appeals court has blocked President Trump's attempt to fire Fed Governor Lisa Cook, keeping her in her post for now. Let's get more detail from Bloomberg White House correspondent Catherine Lucy. So, Catherine, what are the details? What did the court find?
Yes, good morning. That's right. The court has said that she has to remain for now in her position, and that means that the timing is significant here because the Fed has this 2-day meeting starting today, and that likely means that she can attend this meeting. Although one thing to note is that President Trump could still try and appeal to the Supreme Court. But for now, this means that she remains in her post. And looking more long-term, what it means is that this is going to continue to work its way through the courts. Her fight to remain in her role is going to continue.
And that meeting just starting in a few hours from now. Meanwhile, Stephen Miran won his Fed post after the Senate confirmed him. It was a 48-47 vote happening just a few hours ago last night. How long before he joins the Fed's board? Will he be walking in as well today?
That's right. I mean, it was a close vote last minute, but it means that he should be able to stroll right into this expected meeting today, which obviously a lot of people, including President Trump, will be watching very closely to see what happens with interest rates.
Have we ever had this before where we've had potentially an extra governor sitting in the seats? What does it mean for the dot plot, Catherine? And, will both be able to have a voice today, do you think?
I think we have to see how today plays out. As I understand it, both can. But I think the key thing, really big picture to think about here, is just how unprecedented the president's actions are as he continues to put pressure on this Fed board. He has spent, most of the year really pushing for interest rate cuts, trying to have influence here, and trying to really push them in ways that we haven't seen before. Obviously, presidents in the past have made their views known to the Federal Reserve, but But this is a very intense campaign by President Trump.
And of course, Stephen Miran is keeping his job on the Council of the National Council, Economic Council, the Council of Economic Advisors. Will he walk back into the White House literally after he's finished with his FOMC meeting today and before he goes back tomorrow?
You know, I don't have insight into his exact movements. He has said he's taking a leave of absence, and so we'll have to see how that plays out. But obviously a lot happening today with the Fed.
Yeah, absolutely. Catherine, thank you so much. That is Bloomberg White House correspondent Catherine Lucy. Staying in Washington, the Securities and Exchange Commission said it's prioritizing President Trump's proposal to reduce the frequency of corporate earnings reports. For more, Bloomberg's Suzanne Lynch joins. So, Suzanne, the president posted about this in his first term and again now yesterday. We've obviously thought this through. What are the potential upsides and also the costs?
Well, we have seen, some suggestion from the SEC that it's going to consider this, but we have been here before. Donald Trump did suggest changes in his first term. That really didn't lead to much change. So let's see how this goes. But it's an interesting intervention by the president, again, into corporate America, into one of the pillars of corporate America. He believes that the costs of too much disclosure are putting American companies at a disadvantage. Others, however, believe that this would be a break on transparency and would be bad for investors, for regulators, in terms of getting oversight into how a company is performing.
It's fascinating because the SEC says it's prioritizing it, and that sort of brings its own warning. Now, separately, Trump also filed a $15 billion lawsuit against the New York Times. Can you give us some details around that?
Yes, this was lodged, this suit, late on Monday night. It was taken in the state of Florida, obviously a Republican stronghold and basically the home of Donald Trump and his family now. And in this lawsuit, Donald Trump accuses the New York Times of being a mouthpiece for the Democratic Party. He takes issue with a book that was written by two New York Times reporters, as well as other articles. It's a big figure, 15 billion, well past the New York Times market cap. And it represents the latest attempt by Donald Trump to sue American news organizations. We've seen similar efforts when it comes to ABC, CBS, and we saw some settlements in those cases. So yes, definitely a further escalation in terms of Donald Trump's relationship with the media.
Yes, and as you said, we have seen that he's had some success with this kind of attitude. What has been the response from the New York Times?
And so far, we're waiting to hear from the New York Times on this, whether they're going to fight this case. As I say, it refers to a book that was written by two New York Times reporters that is very critical of Donald Trump, as well as some articles. Trump also takes issue with the newspaper's backing of Kamala Harris in the last presidential campaign, as well as their criticisms in articles of Donald Trump. He talks about their criticism of him being unfit for office. So I think Donald Trump has made no secret of his views on what he sees as the mainstream media. But this definitely is a further escalation by the sitting president of the United States to yet again take on a pillar of the American system, in this instance, the media organisation like the New York Times.
Suzanne, thank you so much. That is Suzanne Lynch there. Over in Switzerland, lawmakers have voted against a second attempt to delay stricter bank capital quality rules for UBS, which will lift lenders' capital requirements by some $3 billion. For more, let's bring in Miriam Balazou, Bloomberg Swiss finance reporter in Zurich. Miriam, this is quite the challenge now to UBS. What are its options? What's it looking at?
It's looking at a very various option, a very wide range of options, from something small and technical, like just upstreaming of capital. They already have $5 billion baked in, and there's option to a prospect to get more from CS UK units or from UBS's subsidiary in the US. There's also options of also downsizing the investment bank, which is something that UBS has done before, actually shortly after the financial crisis under Sergio Ermotti's leadership. That was a path that the bank had chosen. There's also the option of spinning it out. Same on that topic, spinning out the Swiss business, which is something that Credit Suisse had looked at in the run-up to its collapse in 2023. There's also more technical things that the bank can do, like SRTs, which would be sort of shifting credit risk to outside investors. And then obviously there are broader, bigger and more sort of tectonic options, such as relocating completely. And this could be done via M&A and buying, for the bank to buy potentially a wealth manager, let's say in the US, that would allow the bank to kind of relocate altogether and solve and go around the kind of Swiss regulatory hurdles that they're facing here.
Yeah, there are a variety of options that it can consider. That's obviously the board's decision, but investors and analysts will surely have a say. What are they saying right now?
It's kind of a mixed views, I would say, because for some investors, let's say there's the activist investor Sevian that has a 1.4% stake in UBS. They've been quite vocal about the bank having no option but to leave. But then there are other sets of investors that are anxiously waiting and looking for more guidance on the next payout, the next buyback program that UBS is going to do. UBS is committed to the 3 billion buyback program until the end of this year, but there's a question mark for the years to come, and that's something that's big on investors' mind. So that's something that everyone is waiting anxiously about. And analysts are quite split, but they also are of the view that the company can achieve that number by just being disciplined and just staying conservative and eventually reach that number organically, because that's also something it can do and set aside money quarter by quarter. And it's a long process, right? So they might get there.
Absolutely. Miriam, thank you so much. That is Bloomberg's Miriam Balazou in Zurich. Now to other top stories trending on the terminal this morning. UK job losses moderate. The number of employees on payrolls dropped a further 8,000 in August, which was fewer than forecast. While it was the 7th consecutive decline, the shakeout has slowed, a sign that the UK jobs market could be past the worst of the slump. Google said it will invest nearly $7 billion over 2 years in the UK. The plan was disclosed just as President Trump is set to announce economic deals totaling more than $10 billion during his visit to the country. The spending will cover Google's AI unit, DeepMind, as well as AI research related to science and healthcare. Israel intensified strikes on Gaza City overnight as Secretary of State Marco Rubio warned Hamas has a very short window for a negotiated deal to end the war. He left Israel for Qatar, where he said he would try to encourage Qatar's leader to re-engage in mediation talks. Coming up, we'll bring you our exclusive interview with Apollo President Jim Zelter. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now to a Bloomberg exclusive. Apollo Global Management President Jim Zelter sat down with Bloomberg's Francine Lacroix on opportunities in Europe and beyond. Take a listen.
This is the most unique period of time in Europe. For the first time in decades, I think there's the good thing about this administration is that the memo has been sent out about global growth and responsibility and accountability. And as a leadership in the countries around Europe are trying to figure out what that means for them, there's certainly a conversation that Apollo wants to be a part of, and we find ourselves being the recipient of a lot of dialogues and part of a lot of dialogue. So very exciting time. It's not a clear picture, and like usual, Europe has many different stories. In terms of the continent and each country, what their objectives and needs are. But very exciting time for Europe, and we've been very public and pronounced about what our ambitions are, whether it's $100 billion in Germany or several hundred billion around the continent. We believe we're going to be a player in that dialogue.
So where do you see the best deals actually in Europe? And when you talk about dialogue, will that translate into actual money being spent in Europe?
Well, I think before you get to deals, you know, around the globe right now there's this massive global industrial capex needs and global industrial renaissance, which is really the provision of capital for whether it's energy, former utilities, transmission lines, whether it's energy sustainability and the modernization of that, whether it's data centers. You know, we find ourselves in a situation where, you know, for the most part, corporates and consumers, our balance sheets are pretty solid, where governments are a bit more challenged. So I think there's a realization that there's a dramatic need for CapEx, and governments on their own are not the solution. And so, you know, every country in Europe has a different objective in terms of their fiscal policies and their fiscal ambitions. And they have great ambitions, but a limited budget to provide that. So I think as the world of finance continues to evolve, you know, certainly we've been quite active in Germany. Yep. We've been quite active in France. You know, Athora, in their recent announcement of the purchase of PIC in the UK, which is a different conversation. But you know, I think we find ourselves, particularly in those two countries, and yes, some in Italy and some in Scandinavia as well. So it's fairly broad brush, but these are massive, massive ambitions from which to fund.
That was Apollo Global Management President Jim Zelter speaking exclusively there with Bloomberg's Francine Lacroix. So it is the first day of the FOMC meeting. Let's take a look at those markets, as we've been seeing pretty much constant records for the major indices. It would be a 10th day of gains today for the Nasdaq 100, and indeed futures on major indices are pointing higher. As you can see, S&P futures with a nice green number there. This after the S&P rose yesterday by 0.5%, and the Nasdaq 100 was up 0.8%. Of course, AI enthusiasm leading it, but in the background, Fed rate cut enthusiasm no doubt as well. The VIX also, though, above 15, we should note. We have gold at another record as well. As you can see, we're above 3,700 right now. 37.32. Continued central bank buying, also a little hedging going on there as well. The 10-year yield at 403, that's all the way down from 407 on Monday when we opened. We have the 2-10 spreads below 50 basis points right now. The US dollar is weaker as well as the FOMC begins. Not unusual, but we have the yen strengthening as well. We, of course, have the BOJ meeting later on this week. No movement expected, but certainly it is giving a little bit of support to the yen, which is up about 0.5% versus the dollar today. Coming up, Cook versus Trump. A look at what's making headlines in your front page news. Next, this is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the Wall Street Journal, an appeals court has rejected an emergency Trump administration request to remove Fed Governor Lisa Cook. The judge said there was merit in Cook's claim that she wasn't given proper notice or opportunity to respond to her firing. The administration could seek intervention from the Supreme Court. Next up, on the New York Times, the Senate vote to install Stephen Miran as Fed Governor. This opens the door for him to join the Fed meeting, which kicks off in just a few hours. Miran said he planned to take only a leave of absence from his role as chair of the White House Council of Economic Advisers. And the Washington Post reporting that the suspect in Charlie Kirk's killing appears to have confessed to friends in an online chat before being taken into custody. A Discord message sent from an account belonging to Tyler Robinson said this: "Hey guys, I have bad news for you all. It was me at UVU yesterday. I'm sorry for all of this." A member of the group chat shared an image of the conversation with the Post and confirmed that it came from Robinson's account. All right, we are about to head into day one of a two-day FOMC meeting, and here is how markets look. We have potentially another green day on our hands for equities after the S&P rose 0.5% yesterday. Futures pointed higher as well today. The Nasdaq 100 had its 9th day of gains yesterday. It would be a 10th one today if that were to continue, and certainly futures there are pointed higher as well. The dollar is weaker. Typically, going into an FOMC meeting, you do see that, but we also have a BOJ meeting this week, and the yen is much stronger. The dollar potentially a winner after those meetings occur. And the 10-year yield down to 4.03 from 4.07 on Monday. Elsewhere, we're down about a basis point across the curve. The 2-10 spread below 50 basis points. And I do want to mention the VIX as well above 15. Get lots of economic data this morning as well. Coming up, we're going to catch up with Kallum Pickering of Peel Hunt on the Fed's dilemma. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Fed tensions. An appeals court blocks President Trump from firing Governor Cook. The Senate confirms Stephen Miran to the board. Rethinking earnings reports. The SEC says it's prioritizing President Trump's push to reduce the frequency of corporates' quarterly reports. And a 25th record of the year. Equity futures extending gains today again as investors await retail sales data ahead of the Fed's decision. So let's just take a look at those futures because they are pointed higher on the S&P and the Nasdaq. It would be a 10th day of gains for the Nasdaq 100 if this continues today, and several of those important stocks, such as Tesla, are higher in the pre-market. Of course, it's AI enthusiasm as well and rate cut enthusiasm. Very likely to get a rate cut tomorrow. Gold, though, interestingly, also very close to that record that we hit. It was above 3,700 just a few minutes ago. Gold up 0.4% right now. The VIX above 15 as well. That might be another little indicator of how the market is feeling. And the dollar is weaker today by about a quarter of a percentage point. At least the index is. The yen stronger. So let's get to some individual stocks to watch now. We go over to London and Valerie Teitel.
Good morning, Ivani. Let's start with Oracle because the speculation is rising that it could be the key beneficiary of U.S.-controlled ownership of TikTok. There was a CBS report out earlier saying that Oracle could play a key role in the TikTok deal. So we're seeing Oracle shares up 3.8%. Note they rallied yesterday on the announcement of the framework. We're still scant on details. We have to wait till Trump and Xi have their phone call on Friday. Let's move on to earnings. Dave & Buster's double earnings missed for them, and the stock is getting punished in the pre-market, down nearly 18% so far this morning. Their adjusted earnings per share came in basically half of what the street expected. They did take a hit on margins and are experiencing lower foot traffic in some of its key stores. Lastly, let's end on comics. It's a big business. Vonnie, Disney announcing a 2% stake in company Webtoon, which is an online platform for reading comics in a vertical smartphone platform. Disney wants to use this key partnership to house 35,000 of its own comics eventually on the Webtoon platform, making a comics-only subscription available for Disney. So Webtoon is up 48% after the announcement of this Disney stake. Bonnie?
Well, now that you've introduced me to it, I know what I'm doing with my afternoon. Valerie, thank you so much. That is Valerie Teitel in London. Kallum Pickering of Peel Hunt looking ahead to tomorrow's rate decision, writing, quote, while the Fed typically reacts more eagerly to downside risks to employment than upside risks to inflation, rarely has the bank faced such complex economic and political trade-offs on the eve of a likely rate cut. Kallum joins me now. He's chief economist at Peel Hunt. So just give us your outlook, Kallum. You say it's a likely rate cut. How many more by the end of the year?
Well, that's the big question. I think we get a rate cut this week. The Fed won't disappoint the market. The question is, do we then get 2 more cuts before the end of the year or just 1 more cut? And this, again, just returns the Fed to the question that we've been asking all summer, which is, will the Trump policies, the anti-growth, inflationary tariffs, will they push the Fed further away from its employment mandate or its inflation mandate? The inflation risks are still persisting, let's be clear, but recent labour market data have been sufficiently weak for the Fed to cut this week. Now, will the Fed say, actually, we're at the stage we can totally look through inflation risks, let's get on top of the economic risks? I don't think we'll be there yet. So I think the market will be hoping for an answer to this question, can the Fed cut 2 more times this year? I'm not sure the Fed will be prepared to give it. That will be basically a data-dependent call.
Well, and Kallum, we can't ignore the fact that the calculus literally changed in the last few hours once again. Do Cook and Miran both walk into this meeting? Do they both get a voice? Has this ever happened before, that there's been an extra voice?
Well, that's the complication. And for me, I'm speaking just purely as an economist here. I find the administration's approach to the Fed a little bit puzzling. Clearly, the administration wants the Fed to cut rates. That's so much is clear. But the way to get a central bank to lower interest rates when faced with potential inflation risks is to strengthen the credibility of the central bank. You know, President Trump should be saying, Powell's just the ultimate genius. There's no way I can ever imagine he won't hit the inflation target. Markets should just trust him to set policy as he wishes. That's the way to get the Fed to cut. That's the way to strengthen credibility. Instead, what we have is this overhang of political uncertainty and these clear attempts by the administration to try and put some pressure on the Fed. That, in market terms, smacks of fiscal dominance. That's where markets start to worry that the Fed might start cutting interest rates, not because it's focused on inflation or employment, because it's trying to help the administration out. You politicize the Fed, you add to inflation risks, you make it harder to cut interest rates. So I see a bit of a paradox here which needs to just resolve itself, and I think it's the data that will resolve it for us in the end.
When and where do we see that filtering through to the market, Kallum? Because sure, we've seen, you know, a big jump lower in Treasury yields, but to a certain extent, I mean, it hasn't been, you know, maybe reflective of a threat to Fed independence just yet.
Well, it's just one of those things that lurks in the background. I don't think it's just a US story, actually. We see it over here in the UK. We see it a little bit in France. We've even seen it in Japan, actually, where the long end of the curve is just a little bit weary of a few things. First, how are we going to process this huge increase in debt issuance as our populations get older, given current fiscal trajectories? Second, inflation seems to have returned to the global economy, not in a major way, but it's there. The balance of demand and supply has changed. We now have to deal with inflationary risks. And then you have, in the case of the US, this politicization of the Fed. So I don't think it's something that permanently affects pricing in markets, but every now and again you'll find that there's just some political tinder there which can be lit easily. We're not worried at the moment in bond markets. Everything seems to be calm. But 2 weeks ago we were in April and we were in February. That's 3 times already this year. So I think we're just going to be going through this repeated cycle of little wobbles.
Kallum, I presume Miran will get a dot, right? Will it be extreme? Will we see the whole dot plot skew a little more dovish because of Miran's dot?
A little bit, but I think the market will be able to just spot it and look through it. I think that would be my guess. The question for the dots will be, again, what will the skew be? And what will be the terminal rate? So if you look at market pricing, markets are saying the Fed might go 150 basis points more, which would be significant. That would take monetary policy in the US from probably slightly tight to actively easy. My base case is for 100 basis points of cuts. I think we'll see a bit of resilience in the economy into next year. But the question over that terminal rate will be important. If the market is validated on 150 basis points, I think we'll see 2 things. 1, equities will really, really like that. But 2, I think we'll start to see questions in the bond market about whether or not that could add to a bit of inflation.
You know, there is also the possibility that the Fed actually sounds less dovish after this meeting. Would the market react to that, given that it's pretty clearly expecting a dovish FOMC meeting?
It's going to be pretty hard for the Fed to sound hawkish if it cuts when inflation is already above its 2% target. I think this is really key. Keep in mind as well, I mean, if you think about the target as an average inflation target, this should actually be a Fed that's prepared to undershoot versus 2% for a while. Of course, that's not going to happen. I think the shock to markets might be if Powell signals that already the Fed has basically decided, that the process for cuts will be cut, then skip, then cut, which would then mean only one more cut probably in the December meeting. One should also keep in mind, this time last year, the Fed cut 50 basis points because we were facing downside surprises to the labor market. So already if the Fed goes 25 basis points, it looks somewhat hawkish.
Yes. Kallum, I want to ask you about the dollar, because today we have the yen at 146.95, so below 147, and the euro above 118. Do those levels become a little more extreme, and is it a dollar story, or is it more the other currencies that are benefiting?
I think it's a little bit of both. In the case of Japan, you would expect at some point the BOJ just to try and get rates up a little more. For the Eurozone, the ECB may have one more cut, but maybe not. And what we're probably likely to see is a bit of a cyclical recovery in economic activity. So that should attract some inflows. But I think we're probably in a structural dollar bear market. And that doesn't reflect so much issues in the US economy, so much as it reflects just the closing of some growth gaps around the world. So in 2022 and 2023, the US economy was just steaming ahead, 3% growth, big fiscal backstop. The rest of the world was struggling because of global uncertainties, issues with trade. Europe was hit by gas shortages. We had almost no growth in Europe in those years. Now that transatlantic growth gap is narrowing, inflows from the US should turn into inflows into Europe, and that should push the dollar down.
All right, Kallum, thank you so much. That is Kallum Pickering there of Peel Hunt. Coming up, Fed Governor Lisa Cook keeps her post for now. Your DC update next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Tensions rising in the Trump-Cook showdown. An appeals court has blocked the White House's attempt to remove Fed Governor Lisa Cook from her post for now. That's just ahead of the Fed's September meeting kicking off today. Let's get more detail from Bloomberg White House correspondent Catherine Lucy. So, Catherine, what were the details of this particular decision?
Hey there. Yes, the court has ruled that she can remain in her position for now while her lawsuit to stay on the board proceeds. And obviously, heading into today's expected Fed meeting, that means that she is likely or certainly can attend that meeting, barring some kind of last-minute appeal from the White House to the Supreme Court. So it really is sort of another turn in what has become a very intense showdown between Cook and Trump.
And that meeting starting in just a few hours. President Trump's economic advisor, Stephen Miran, also won his Fed post after the Senate confirmed him in a 48-47 vote a few hours ago last night. Does he already join the Fed board then today?
That's right. Last minute vote, coming right down to the wire. But yes, he can head into this meeting today, and you see that sets up a situation where he can be there, as President Trump obviously has been pushing very hard for an interest rate cut.
Well, separately, President Trump has urged now the SEC to change rules around companies' earnings reports. Now the agency says it's prioritizing the case. So what is the latest on that push? What would be the consequences?
That's right. They say that they're prioritizing this. This obviously comes after President Trump has called for this, which would be a significant change to how proceedings are usually carried out. We'll have to see what happens, though. President Trump made a similar push back in 2018, and while there was a review, ultimately there were no changes finalized.
We'll wait more on that, obviously. The president also heading to the UK later this morning, this big visit that we've been anticipating. What are we expecting? What's on deck?
Yeah, he has an action-packed 2 days. The president's expected to arrive in the UK in the evening tonight. And then on Wednesday, he will have a full day of events with the royal family, with King Charles, culminating in a banquet dinner Wednesday night. This is his second state visit. He had one during his first term. So there'll be a lot of fanfare associated with that on Wednesday. Then on Thursday, he will have a series of diplomatic meetings with Prime Minister Keir Starmer. That's going to include some tech executives and CEOs for a series of announcements about investments. And then he and Starmer are expected to have a press conference.
All right, Catherine, thank you so much. That is Bloomberg White House correspondent Catherine Lucy. Over in Israel, Jerusalem intensifying strikes on Gaza City overnight. Prime Minister Netanyahu says the nation's military has now begun an intensive operation. Secretary of State Marco Rubio spoke to reporters as he landed in Doha.
As you saw, the Israelis have begun to take operations there, so we think we have a very short window of time in which a deal could happen. We don't have months anymore. And we probably have days and maybe a few weeks. So it's a key moment.
Joining us now from Jerusalem is Bloomberg's Dan Williams. Dan, this Gaza City operation announced by Israel almost 6 weeks ago, it's taken quite a long time to implement. What are the reasons?
Well, I'd say that as that saber was being drawn, a saber that Israel said was required to finish off Hamas, to decapitate Hamas, if you like, it was also being rattled. And I think it's no accident that this final push into the heart of Gaza City was launched as Rubio, the top U.S. diplomat, launched a spontaneous bit of shuttle diplomacy, flying from Israel to Doha, to Qatar, for a very short visit, emergency talks with the Qatari leadership about, he said, possibly getting Hamas to surrender. So it would appear that even while Israel has now, after several weeks of planning, launched this operation, thrust into what remains of what it says is the last Hamas bastion in the Gaza Strip, it still hopes that Hamas can be convinced to lay down its arms, hand over hostages, and avert this showdown, a showdown that will cost Israel in terms of troops, casualties among troops, among the hostages who are still alive, and certainly among the hundreds of thousands of Palestinian civilians still in that conurbation.
And then how does it all square with the Secretary of State, Marco Rubio's visit to Qatar today? He's trying to get the Qataris to start mediating again, right?
Yes, I mean, it's sort of a minuet. You have the Israelis going in strong and loudly and destructively with this operation. It's worth noting the Israelis haven't said explicitly that their troops and tanks are presently in the heart, in central Gaza City. They say they're on the way there. It's a distinction that's important because as soon as you'll see tanks in the heart of Gaza City, you'll know Gaza City has fallen effectively, and Hamas will certainly know that. So while the Israelis are signaling that they're going in the coming days and weeks, Rubio is signaling that there is a way out, a non-violent way out. If Hamas that's being represented in mediation talks by Qatar, can be convinced to surrender and end the war that way.
So tanks and troops on their way, according to the Israel Defense Forces, to Gaza. As you say, if we see pictures of that or if we know that they are there for sure, what else does that signify?
Well, Israel hopes that would be the end of the war militarily because its strategy has been dubbed by Israeli media as what's called conquer and crush, meaning Israeli forces advance slowly. They churn up anything that might be used by Hamas for military installations, bunkers. That includes a great deal of Palestinian dwellings, and effectively make sure that there can be no return there. This requires corralling Palestinian civilians in DP camps, large DP camps in the central of the Gaza Strip, effectively depriving Hamas, what fighters survive, of the weaponry to continue the fight. Israel hopes that will spell a de facto victory and a recovery of those hostages, dead or alive. If that fails in the Gaza City, then they may continue to a number of townships in the central Gaza Strip where they have also yet to conduct such operations. I think it's clear that the Israelis would like to see this end conclude with victory over Hamas in Gaza City sooner rather than later.
All right, Dan, thank you so much. That is Bloomberg's Dan Williams in Jerusalem. Turning to tech now, Google announcing its plans to invest nearly $7 billion into the UK's AI economy over the next 2 years. That's ahead of President Trump's state visit to Britain, which begins Wednesday. Let's go straight to Bloomberg Tech Europe anchor Tom McKenzie for more. So, Tom, what do we know about all of this investment?
Yeah, well, we are expecting, of course, a flurry of deals, as you suggested, from the tech space, from those tech leaders over the next few days as part of that visit by President Trump to the UK, that state visit. And we have the first details coming through from Google. So £5 billion, about $7 billion US, as you said. A lot of that money will go to Google DeepMind, which is headquartered here in London for research and science and pushing forward on that front. But there will also be money allocated to a data centre as well to help power some of the Google services that UK citizens and businesses use, of course, and the mapping as well. That commitment of £5 billion or $7 billion US being funded over 2 years, says Google. And to your point, they have said they are playing their part, trying to help build this AI economy in the UK. We are expecting, of course, deals, as I said, as well, from the likes of NVIDIA and OpenAI. So we're watching for that as well. Further commitments, of course, from the maker of those AI accelerator chips, NVIDIA, and OpenAI as well. Largely, you would expect on the infrastructure underpinning AI, and those deals could come through in the next 24, 48 hours.
Yeah, absolutely. And then, you know, the other Eye-popping thing was that these talent wars continue, these AI talent wars. OpenAI has hired the former CFO of XAI. You have to tell us the details of this.
Yeah, Mike Liberatore, who's only been, or had only been at XAI just for a number of months, in fact, as you say, the CFO of XAI. They've been spending heavily on infrastructure as well to build out, of course, their AI proposition. He now has, according to CNBC, been poached by OpenAI. It's a reminder as well of the talent wars. They continue. We've seen Mark Zuckerberg signing checks for $200 million to poach talent from some of his competitors. OpenAI is not sitting on its laurels on this front and now has poached a CFO who's going to be reporting to Sarah Fryer. He's going to be the business chief executive, or the business executive, focused on spending on infrastructure, and he'll be reporting to OpenAI's CFO, Sarah Fryer. And what it could do as well is just really underscore the tensions between OpenAI, between Sam Altman and Elon Musk. And those tensions have kind of burst into the open, particularly at the beginning of this year when Sam Altman told me that he feels sorry for Elon Musk and that he thinks Elon Musk is trying to hold back OpenAI. So it will be another source of tension, you would have thought, between Musk and Sam Altman.
No doubt. Absolutely no doubt about that. Our thanks to Bloomberg Tech Europe anchor Tom McKenzie. Coming up, retail sales and a treasury auction will get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for the day. First up, President Trump heading to the UK this morning around 8:30 Eastern Time. Also at 8:30 we'll get retail sales data, and that's followed by industrial production at 9:15. And then the Treasury will auction $13 billion of 20-year notes a little later on. Let's take a look at some movers before the bell. CBS News reporting Oracle could play a key role in that US-China TikTok deal that's sending Oracle shares higher to the tune of 4.4% now in early trading. Hershey double upgraded to a buy at Goldman with a price target of $222, up 2.4% of the early trade. And Webtoon, Disney is taking a 2% equity stake in the company and making all of its marquee comics available via a single subscription. As you can see, that sent that stock almost 50% higher in the pre-market trade. But it is day one of the Fed meeting, the FOMC decision coming out tomorrow. So let's take a look at the macro environment. We have futures on equity indices pointed higher once again. If today is a positive day for the Nasdaq 100, that would be its 10th straight positive day. So obviously it's setting up for that. Dollar weaker, you might anticipate that going into a week of meetings by central banks, particularly the yen, which is stronger today versus the US dollar. It is below 147. The euro is above 118. And if we look at yields, we're just a basis point lower pretty much across the curve. We're at 353 there on the 2-year. The 10-year yield is interesting. We're at 403.75. We started the week at 407, if you'll remember. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.